On this edition of Next Africa, the global race for critical minerals is accelerating, and Africa is right at the center of it. We find out how the continent can turn surging demand into lasting economic gains. And Botswana looks beyond diamonds. The country is pivoting towards a more diversified minerals future. I sit down with Botswana's Minister of Minerals and Energy, Bogolo Kenewendo, on what comes next. Plus, from cobalt and copper to how artificial intelligence is reshaping mineral exploration. KoBold Metals launches the largest exploration campaign of any company operating in the DRC. Welcome to Next Africa. I'm Jennifer Zabasajja, coming to you from Cape Town this month. The global race to secure critical minerals is on, and it's reshaping economies around the world, redrawing trade relationships and shifting geopolitical power. And Africa sits at the center of this shift as countries move to secure supplies for electrification, technological advancement, and also national defense. Bloomberg's Tiwa Adebayo reports.
No continent is richer in natural resources than Africa. From the metals that power electric cars, to the wires behind global power grids and data centers, to the gold that underpins economies and currencies worldwide. Take cobalt. It's indispensable for electric vehicle batteries and energy storage. The Democratic Republic of Congo produces nearly 3/4 of global supply, giving Africa a central role in the clean energy transition. And as demand for EVs, data centers and AI infrastructure surges, cobalt has become not just a commodity, but a strategic asset for countries like the US and China. And then there's copper. The price has rallied to all-time highs this year as demand for the red metal soars through the roof. Countries across the world are racing to meet surging demand, from grid expansions and electrification to the rapid build-out of AI data centers and modern defense systems. And that demand is putting Africa's copper belt firmly in focus. Stretching across the DRC and Zambia, it's among the richest copper regions on Earth. Zambia alone is targeting 3 million tons of annual production by 2031. That's more than triple today's levels. But Africa's mineral story doesn't end with the metals of the energy transition. There's also gold, the continent's most enduring mineral story. And long before some of these critical minerals entered the conversation, gold was powering economies across the continent. Today, countries like Ghana, South Africa and Burkina Faso remain among the continent's top producers, supplying global markets whilst also supporting millions of jobs across formal and artisanal mining. And for many African economies, gold remains a critical source of revenue, foreign exchange and employment. And that's even as the world pivots to new minerals. And together, these minerals put Africa at the center of the global economy's future. The continent holds a vast share of the world's critical mineral reserves, yet captures only a fraction of their value, constrained by infrastructure gaps, financing risks, ESG scrutiny, and fierce global competition.
And for more on the context of the biggest beneficiaries in the race for critical minerals, we are joined by Bloomberg NEF's head of metals and mining, that's Kwasi Ampofo, here. Let's just start here, because there's quite a lot of discussion about what is critical and for who. How would you assess what is critical for Africa at this point in time? Because it differs from what's critical for the Western world.
Correct, and I'm glad you make that distinction, because you take America, for instance, actually legislated their definition for critical. Critical to industries that matter, like defense. It's concentrated in a country that would not be considered an ally, and the list goes on and on, what the US described as critical. Same with the EU, same with Brazil, same with Indonesia. I think Africa collectively has not yet crafted that definition of what is critical. And if you and I were to do that now, I think the three things that should be on top of that agenda: can it help us industrialize? Can it help us to create jobs and improve the economy? And then I think the final thing is that, can it ensure that Africa's evolution towards industrialization done in the greenest possible way? So industrialization, job and economic creation, and then finally, a green transition.
Has the industry caught up to that reality, or are they still sort of serving what is their export partners?
I think, yes, we've seen that marginal shift, and for the simple reason being that governments as well as companies are no more just looking at exporting rocks. thinking about value addition, right? And that feeds into the industrialization pillar. We're seeing more of the cobalt from the DRC and the copper from Zambia increase in export, and that's Africa's contribution towards the green economy. And finally, we just listened to the Zambian president, and he talked about how much money has been invested in the mining industry the last 4 years. And he mentioned something around $12 billion, right? So I think all three companies and governments seem to be aligned, but there's always room for improvement.
Yeah, let's talk about some of that improvement and potentially where we are seeing progress in terms of project expansion. What are you noticing right now?
I think it's important that it's very concentrated in a few countries, unfortunately. You can take Ghana as an example. Ghana has added significant capacity of gold in terms of ounces, overtaking South Africa to be the leading gold producer. In cobalt, DRC, we've seen the Congo double its capacity. Zambia is aiming to reach 1 million. But at the same time, we've seen South Africa's contribution to some of these commodities decline. So it's not really a universal, evenly distributed growth. Some are concentrated than others.
What is going to be contingent for the industry to catch up to really the demand, the global demand, but then also regionally what they need? Is it coordinated policies that we heard from the AFC president? Where does it start?
So coordinated policy is a good start. One market, because we need to also create our own demand. We cannot rely on demand in the U.S., especially what happens in the U.S. shouldn't impact the mine in Congo in an ideal world. We also need infrastructure. I think it's important. Lobito is a classic example of how infrastructure can unlock regional opportunities for the continent. And we need capital, a diversified capital market where whether you're an explorer or scaling up an existing brownfield, it's important for you to tap into a segment of the market that will support you. If we do these four things, I think Africa will be well positioned to take advantage of the global demand.
But in some way, some of these foreign investors and these foreign partners, there is still a place for them, right? And I'm talking in particular U.S., China. Yeah. Where do you see sort of this race for critical minerals more broadly?
54 countries on the continent. Yeah. Certainly there's room for everyone, including Africans themselves, across China or the U.S. I think the most important thing is that we've seen the colonial days where it was just shipped out with very little utility for Africans. And this time, what has to change is that regardless of who wants to partner Africa, I think it has to be a win-win relationship. And I think that's what governments are focusing or aiming for. It's not just about China, it's not just about the US, but then how can US and Africa rise together?
Coming up, as demand for diamonds slumps, Botswana is ramping up its efforts to diversify its minerals future. We'll bring you my conversation with Bogolo Kenewendo, Botswana's Minister of Minerals and Energy, next. Plus, what world leaders are saying about Africa's role in the minerals race.
Almost everything you touch, including these cameras and lights that are enabling us to broadcast this to the whole world. We go to Bloomberg, world headquarters. It's copper, very high tech. So most of the old known mines are gradually declining in grade. Most of the easy mines of the world have already been found, but there's tremendous exploration potential, in particular on the African continent, to supply world demand.
The whole landscape has changed because fundamentally what has happened is that governments have recognized how important minerals are to any of their national security goals, whether that's defense, energy, industrialization. So that has brought with it a level of support that the mining industry has not seen in decades from governments. And that's created opportunities for new projects, new sources of capital coming to the industry like sovereign wealth funds, more partnering opportunities.
Cannot do critical minerals without water and without energy, without ports, rails, and roads. Infrastructure. Folks, if they don't want to invest in critical minerals, can actually invest in infrastructure. Absolutely critical to critical minerals, right? So infrastructure, a little fact that's very important. If you're an investor, you want to invest in infrastructure, year over year for the last 10 years, returns on infrastructure investment in Africa is 8 to 10%, all the way up to 11, 12, 13%.
Welcome back to Next Africa. I'm Jennifer Zabasajja in Cape Town. Botswana has long been one of the world's most diamond-dependent economies, but as global demand for diamonds softens, the country is accelerating efforts to diversify its mining sector and build a broader minerals base. I spoke with Botswana's Minister of Minerals and Energy, Bogolo Kenewendo, about the country's pivot towards a more diversified minerals output.
Botswana's mining industry has largely been about the diamonds. Even the focus of our legislation has largely been how do we stimulate beneficiation in the diamond industry. But in the last year, we've worked really hard to refocus into diversification within mining, just outside of diamonds. Not to say we're not doing any work in the diamond space. We continue to champion and to lead in the diamond space. But, you know, having a monolithic economy isn't always the best, and we are learning it the hard way. And now we are really stimulating for expansions and increased production in copper. We are facilitating projects in manganese. We are facilitating the beneficiation of soda ash. We're looking a lot more into exploration around the Kalahari copper belt, the platinum and chrome belts. We're really looking at aspects of gold in Botswana, and we really think that we will hit something, because as we stand, we've only done exploration for 30% of the country. So in real essence, while we're a major mining economy, we are a child when it comes to general mining, and so it's exciting time to try to draw more investors into mining in Botswana.
So quite a big ambition, as it sounds like, with the mining sector.
Yes.
Do you have a trajectory of when you want it to go from exploration to a bit more discovery and eventual investment into some of the projects?
You know, one of the downfalls of exploration and leaving it to other people is exploration needs a lot of patient funding. It needs people that are willing to go in first. And so we've decided as a government that we're going to start an exploration company, and we are going to champion exploration so we can create a good database for investors, so we can leapfrog a lot faster from exploration processes to productive mining. And so we're hoping that several new mines or starting work in mines will happen between the period between now and 2028, given some of the data that we're seeing. And we're starting to see some of the large mines, mining companies also come into Botswana. So that is giving us a little bit of hope that we'll start to see productive mining take off. And we're working through any of the legislatory, regulatory issues that have been hindrances to seeing that productive mining happening in Botswana, and we're really feeling upbeat about the prospects.
What are some of those regulatory hindrances? And I speak specifically about past agreements that you've maybe had with other mining companies. I wonder if any of your past experiences are informing what you're looking to do now.
Well, I'll come to that, but let me answer what are some of the hindrances. Yeah. It's not necessarily hindrances, because we have a good mining jurisdiction. We're a good mining jurisdiction, but we can make things better, you know, and we are starting to allow small-scale mining. Not artisanal mining, small-scale mining, so allowing a little less capital-intensive mining to come in. So that is now in the new Mines and Minerals Amendment Act. And we are very clear about what the standards are for rehabilitation. You know, there are no questions a little later of the expectation of the symbiotic relationship between nature and mining, and we're really clear on that. And we have now introduced carbon credits because that's what the mines are asking for. They want to prove to their funders, their financiers, their customers that they are working in a lot more carbon neutral space, and they're working on that. And we are introducing renewable energy and renewable energy certificates. So as a mine, you can come and apply to us for an energy project to generate your own electricity. And we believe that this is helpful because as we currently sit, we have an energy deficit. We are accelerating projects, major projects, as quickly as we can. But you know, major projects take time. So if mining companies can be in a position to generate for themselves, then we will work very hard and urgently to facilitate such.
And then how are your past experiences then informing some of these?
So we think the Botswana model, our triple P model with De Beers, is a test case that we should try to spread across other mineral sectors. And so we're interested, as we go into exploration, we're looking for partners to create a triple P model. We're going into new minerals. We will be looking for investable minerals, investable projects, not just in mining, but also in the downstream, because we have a really solid test case of how a private and government partnership can yield more value for the country.
The Democratic Republic of Congo, in collaboration with U.S.-backed KoBold, is stepping up its efforts to modernize its mining sector. The country announced plans to digitize decades of mining data using AI to improve transparency, efficiency, and future exploration. KoBold also plans on launching one of the largest mineral exploration campaigns in the country, spanning roughly 3,000 square kilometers. I spoke with the KoBold DRC CEO, Benjamin Katabuka, about what this all means for the future of mining in the country.
The DRC government, of course, is willing to attract more investment in exploration, but we know that it is important actually to have exploration because this is actually the beginning of the mine which actually come to production. So if there's no exploration, we know that there's more demands now on critical minerals, and then that will continue to grow. So it is important. The DRC government understands that. The Minister of Mines, with whom we work very closely, understand that, and he's encouraging more investment in exploration. The government is doing its part actually in terms of governance, also in terms of security actually to make sure that investors coming into the country are secured.
Coming up, Africa holds trillions of dollars in undeveloped mineral assets. We'll get you my conversation with the Africa Finance Corporation President and CEO, Samaila Zubairu, and hear how he believes the continent can unlock that potential. Welcome back to Next Africa. I'm Jennifer Zabasajja in Cape Town. According to the Africa Finance Corporation, the continent hosts about $29.5 trillion of global mine site mineral value, and yet more than $8 trillion of that remains undeveloped. I spoke with AFC CEO and President Samaila Zubairu on this unrealized development potential and the opportunity for the continent and global investors.
It's for us projects that we're financed or that we've closed on financing. It is for, of course, the presidents to discuss among themselves at the AU by the end of the week. The African Union, they have the African Minerals Vision. It's for them to use it to create more policy coordination. It is for the various ministers of mines, to see this as a tool, for their work. And for us, it is the projects that we're financing. And on the artisanal gold program, we want to show some examples of what we've delivered. Yesterday I was saying that what is important for execution is results. So we must ask ourselves, what do we want to show that we've done by next year? And all of us should have a target. If we come here next year, what are we going to say that we've achieved? And together we'll achieve more. We have to focus on how we build Africa. And I think the time is now, and we'll build Africa together.
And in the race for critical minerals, railways are becoming a strategic asset, and we're seeing countries like China stepping up their investments. Here now to talk about all of this is Matthew Hill. He is a Bloomberg News Africa correspondent who's been covering mining in Indaba for quite some time. We've been talking quite extensively across Bloomberg about just the commodity boom that we are seeing, but really what we're seeing from gold. But from your vantage point, you are seeing an increasing focus on copper. Can you talk about really what the dialogue and the rhetoric has been over this mining in Indaba as it pertains to that metal?
We are seeing an increasing clamor for copper from the world's developed economies, as well as some more developing economies. And a growing realization that the world is going to need to secure much more copper for things like building AI data centers, which are extremely heavy on electricity use. And anywhere you find growing use of electricity, you're going to find growing use of copper. And in a world that's using much more copper, we need to find where that copper is. And in Central Africa, you've got Zambia and Congo, which sit in a pretty unique position of being one part of the world where copper production has been increasing rapidly and will continue to do so in the coming years. The problem with that is the Central African copper belt is literally in the middle of Africa, a continent which has some of the world's most poorly developed logistics.
Which is where infrastructure has made its way quite extensively, I think, throughout these discussions with mining executives and even government, because you have covered extensively about some of the infrastructure throughout the Southern African continent, where are we at in terms of getting these metals from the ground then to the export market?
That's such an important point. And this is where geopolitics have really come to the fore. We've seen the US and the EU backing a railway project coming out of the Central African copper belt from southern Congo to an Angolan port, an Atlantic port on the western side of the African continent called Lobito. They've pledged hundreds of millions of dollars to refurbish an existing railway there and then connect it to the south, into Zambia, where there is also a growing demand for logistics into and out of the Zambian copper belt. On the other hand, we've got China, a consortium of Chinese investors led by a state-owned company that is now spending nearly $1.4 billion on refurbishing an existing railway line that was built in the 1970s during the Mao era that connects the Zambian copper belt to the Dar es Salaam port in Tanzania, to the east of Zambia, which has actually emerged as now the most used port for the Congolese and Zambian copper mines. So you essentially see this race from the West, the EU and the US, to develop the Western rail corridor, the Lobito corridor, and now China to refurbish the Eastern Tazara railway corridor.
I mean, and people talk so much about how it's not a race, it's not a competition, but I think you just mapped out sort of in what sense it sort of is. But then there's also the added fact that a lot of these African governments like Zambia and the President Hichilema trying to figure out how they fit into it, right? What did we hear from the president?
Exactly. So President Hichilema spoke this week in his keynote and to us journalists about the importance of both of these projects. I know a lot of politicians have tried to characterize these two separate projects as being complementary and crisscrossing, forming a corridor that will crisscross the entire African continent for the first time. That can also benefit farmers, providing much faster, more efficient and cheaper logistics for getting their crops to markets around the world. But I mean, at the end of the day, it is a power play between the West and China in accessing these critical minerals. That's the core of this.
And that is Next Africa for this month. But don't forget our weekly podcast for more of what's happening across the continent. That's available on Apple, Spotify, and wherever you usually get your podcasts. You can also subscribe to our bi-weekly Next Africa newsletter, available on the terminal and website for even more reporting from the Bloomberg team. But for now, I'm Jennifer Zabasajja in Cape Town. We'll see you next time.